Welcome back to The Explainer. Today, we're talking about a tech giant that just made a multi-billion-dollar move, and believe me, it's sending a massive signal about the future of the stock market. We're going to break down what they did, why it really matters, and how it could kick off one of the biggest IPO races we've seen in years. So let's just dive right in. You've got this huge tech company securing an absolutely massive line of credit. And the first thing you have to ask is, what's the plan here? I mean, this isn't just pocket change. It's a super strategic move that's going to have enormous implications for the entire tech industry. Okay, here's the number that's been grabbing all the headlines: $1.8 billion. That's how much Databricks, a major player in data analytics software, just secured in fresh debt. And yeah, this is the move that's kicking this whole conversation off. But you know, that $1.8 billion, it's really just the tip of the iceberg. Taking on this kind of debt isn't about, keeping the lights on. No, it's a powerful statement of intent. So what's the real message Databricks is sending to the market? Well, this new loan brings the company's total accessible line of credit to over $7 billion. Let that sink in. That is an enormous war chest. It gives them incredible flexibility and just a ton of financial firepower for whatever they're planning next. So you might be wondering, who exactly is the company making a move this big? To really get the significance of this debt, we need to understand the powerhouse behind it. Let's talk about Databricks. To put it simply, Databricks helps companies tame chaos. They are an absolute dominant force in data analytics and AI, providing the tools that businesses use to make sense of these massive complex data sets and, turn them into real, actionable insights. And the company's financial health, it's just staggering. It's valued at $134 billion, and it's pulling in nearly $5 billion in annual revenue. But what's really impressive is that it's still growing at over 55% year over year. And look at that subscription gross margin, over 80%. That means for every single dollar they make on subscriptions, they keep more than 80 cents. That is the sign of a very healthy business model. And this isn't just growth at any cost. Nope. They've had positive free cash flow for the last year, which basically means more cash is coming in than going out, a huge sign of stability. On top of that, they were ranked number 3 on CNBC's really prestigious Disruptor 50 list for 2025. So yeah, this isn't just a big company, it's a highly respected industry leader. Okay, so this brings us right back to our original question. Why take on all this debt right now? Well, when you see a healthy, profitable private company make a financial move this big, it usually means they're fueling up for one thing, one major event. And that major event is almost certainly an IPO. For a company of this size and health, the next logical step is Wall Street. An initial public offering, or IPO, is when a private company, for the very first time, makes its shares available for you and me to buy on a public stock exchange. And hey, don't just take my word for it. This isn't just some wild speculation. The company's co-founder and CEO, Ali Ghodsi, has said it himself. He told CNBC he wouldn't rule out an initial public offering this year, which puts a 2026 IPO squarely on the table. So ultimately, that $7 billion isn't just debt. It really is a strategic war chest. See, going public is an expensive, super intense process. This capital gives them maximum flexibility to maybe make some acquisitions, to weather any market volatility, and just present a rock-solid balance sheet to all those potential investors. All right, so for our last section, let's zoom out a bit, because this isn't just about one company. Databricks' move is actually part of a much larger trend that could really define the next year or so in tech. It looks like 2026 is shaping up to be a massive year for tech IPOs. The market is absolutely buzzing as some of the biggest private companies in the world are all getting ready to make their public debut. And just look at the company Databricks is keeping. This is the potential IPO class of 2026. We're talking about massive household names here, like AI leader Anthropic, design giant Canva, the legendary OpenAI, and of course, fintech powerhouse Stripe. This is the big league, and Databricks is positioning itself to be a major, major player. And all this brings us to our final thought. By securing this massive financial cushion, Databricks has made an incredibly powerful statement. It's a message of strength, confidence, and readiness to Wall Street. The only question now is, in the great tech IPO race of 2026, is this multi-billion-dollar war chest enough to put them in pole position?